Master Guide, SAP Stock Transport Order, STO. 1. Executive Overview and Business Rationale. While stock can be moved between plants using simple transfer postings, T-code, MB1B, or MIGO, the Stock Transport Order, STO, is the industry standard for moving goods when logistics execution is required. Why use STO instead of transfer posting? As a consultant, you must articulate the value of STO to the client. Unlike a simple inventory adjustment, an STO integrates SD, and LE, logistics execution. MRP visibility. The receiving plant sees the incoming stock as on-order stock, and the supplying plant sees demand. This is critical for planning. Logistics execution. You can create a delivery, outbound delivery. Pick, pack, and generate shipping documents. Route determination. You can calculate transit time and delivery dates based on routes. Pricing and freight. You can capture freight costs, intracompany or actual transfer prices, intercompany. Traceability. A purchase order history, ME21N, is created, providing a document trail that a material document, MIGO, lacks. 2. Classification of stock transfers. To be an expert, you must distinguish between the three primary methods of STO. A. Intracompany STO, plant to plant. Scenario: movement between two plants belonging to the same company code. Financial impact: no invoice is generated. Valuation is based on the material price in the supplying and receiving plants, moving average or standard. Document type: UB, standard. Delivery type: NL, replenishment delivery. B. Intercompany STO, cross-company. Scenario: movement between two plants belonging to different company codes. Financial impact: the supplying plant sells the goods to the receiving plant. An intercompany invoice, IV, is required. Document type: NB, standard PO. Delivery type: NLCC, replenishment delivery cross-company. C. STO, without delivery. Scenario: administrative stock move where picking or packing is irrelevant. Process: PO, goods receipt, no outbound delivery. Note: rarely used in complex manufacturing environments, but useful for quick corrections. 3. Configuration roadmap, the backbone. This section details the back-end setup required in SPRO. A consultant must memorize these paths or the transaction codes. Step 1. Define shipping data for plants. Path: greater than purchasing greater than purchase order greater than setup stock transport order greater than defined shipping data for plants. This is the bridge between and SD. Supplying plant: you must assign a sales area, sales org, disk channel, division to the supplying plant. This tells the system how to sell the goods. Receiving plant: you must assign a customer number to the receiving plant. The system treats the receiving plant as a customer to generate a delivery. Greater than consultant tip: the customer master record assigned here must be created in the sales area of the supplying plant. If plant A supplying is in sales area 1000 or 10 or 00, the customer representing plant B, receiving, must be extended to 1000 or 10 or 00. Step 2. Assign document type and delivery type. Path: greater than purchasing, greater than purchase order greater than setup stock transport order greater than assigned delivery type and checking rule. This table controls the STO behavior. Order type UB plus supplying plant, assigned delivery type NL. Order type NB plus supplying plant, assigned delivery type NLCC. Checking rule: typically RP replenishment or O1. This dictates the availability check ATP logic. Step 3. Assign document type, 1-step or 2-step. Path: greater than purchasing greater than purchase order greater than setup stock transport order greater than assigned document type, 1-step procedure, under delivery tolerance. Supplying plant plus receiving plant. Here you define which PO document type is valid for this specific relationship. 1-step: if flagged, stock moves directly from supplying to receiving, unrestricted, upon PGI. If unchecked, standard. Stock goes to stock in transit upon PGI and requires a goods receipt, MIGO, at the destination. 4. Deep dive: intracompany STO, Scenario 1. The objective: move material X from plant A to plant B, same company code. Master data prerequisites. 1. Material master must exist in both plants. 2. Sales view, supplying plant. Sales, general or plant view must have a loading group and transportation group, critical for shipping point and route determination. 3. Customer master, a customer record representing plant B T code, BP, in S or 4HANA or XD01. Role, no special role required, but ensure the address matches plant B. The process cycle. 1. Create STO me21N. Doc type, UB. Supplying plant, plant A. Item category, U. Stock transfer. Result, system confirms availability and schedules the delivery. 2. Create outbound delivery, VL10B. This is a background transaction often used by logistics planners. You execute it to create the delivery document. 3. Process delivery, VL02N. Picking, enter picked quantity or storage location. Post goods issue, PGI. This triggers the accounting and inventory movement. Movement type, 641. Stock moved to stock in transit. 4. Goods receipt, MyGo. Log in as receiving plant, plant B ref, outbound delivery, or PO. Movement type, 101. Result, stock moves from transit to unrestricted use in plant B5. Deep dive, intercompany STO, scenario 2. The objective, move material Y from plant A, company US, to plant B, company UK. This is the most complex scenario because it involves pricing and billing. Additional configuration, crucial differences. 1. Vendor master, the supplying plant must be set up as a vendor in the receiving company code. In the vendor master, purchasing data view, go to extras greater than add, purchasing data and assign the supplying plant code. This links the vendor ID to the plant ID too. Internal customer, the receiving plant is set up as a customer in the supplying company code. 3. Pricing procedure, RM2000 versus ICAA01. The PO uses a purchasing schema, example, RM2000. The price is determined by info records. The delivery uses a sales pricing procedure, example, ICAA01. This determines the price the supplying company charges. The receiving co-condition type, PI01 or PI02, intercompany price. The process cycle. 1. Create STO me21N. Doc type, NB, standard. Vendor, the vendor representing the supplying plant. Item category, standard, blank. 2. Outbound delivery, VL10B, and PGI, VL02N. Movement type, 643. Cross-company stock in transit. 3. Billing, VF01. The supplying company creates an intercompany invoice, IV, based on the delivery. Accounting entry, Dr. Customer, receiving co-crossing. Revenue. 4. Goods receipt, MyGo. Receiving plant posts, GR movement type, 101. 5. Invoice verification, MIRO. Receiving company posts an invoice receipt, LIV, against the PO to pay the vendor supplying County 6. Expert troubleshooting and debugging. A consultant is defined by their ability to fix errors. Here are the most common SANTO failures and how to solve them. Error 1. Not possible to determine shipping data for material. Root cause, the system cannot determine the shipping point. Logic, shipping point equals shipping condition, customer master, plus loading group, material master, plus delivering plant. Fix. 1. Check material master, sales, general, or plant for loading group. 2. Check customer master, representing the plant, for shipping conditions. 3. Go to OVL2 and ensure the combination exists. Error 2. Sales area not defined for customer. Root cause. The customer assigned to the receiving plant has not been extended to the sales area assigned to the supplying plant. Fix. Use XD01 or BP to extend the customer to the correct sales org or dis channel or division. Error 3. Partner description for plant X missing. Root cause. In intercompany STO, the vendor master is not linked to the supplying plant. Fix. Go to vendor master XK02, greater than purchasing data, greater than extras, greater than additional purchasing data, greater than assigned plant. Error 4. Pricing error in intercompany billing. Root cause. Copy control or condition records missing. Fix. 1. Check VTFL, copy control, delivery to billing. Ensure price source is set to A, delivery. 2. Maintain condition records, VK11, for PI01, intercompany price. 7. Advanced STO topics. A STO, with delivery costs, freight. In intracompany STO, you often want to capitalize freight costs onto the material inventory value at the receiving plant. Config. Enhance the purchasing pricing schema, RM0000. Add a condition type for freight, example, FRA1. Process. Enter the freight vendor and cost in the PO Conditions tab. MyGo. When GR is posted, the material value increases by the freight amount and the freight clearing account is credited. B. Return STO. What if Plant B needs to send bad stock back to Plant A? Method 1. Create a new STO from B to A. Method 2. Use the returns flag in the original PO line item. Delivery type NCR returns delivery. Movement type 671. Return to stock in transit, or 161. C. Route determination. Crucial for calculating transit time. If Plant A is in New York and Plant B is in London, the system needs to know the transit time is 10 days to schedule the delivery correctly. Config 0VTC routes. Determination, departure zone, supplying plant, plus destination zone, receiving plant customer, plus shipping condition plus transport group. 8. Technical reference. Tables. For a hands-on expert, knowing the tables is essential for writing functional specifications, FS, for ABA PERS. Table description key fields. ECHO PO header, BSTYP, FBSART, UB or NB. RESWK, supplying plant. EKPO PO item works, receiving plant. MATNR, material. LIKP delivery header, LFART, NL or NLCC. KUNNR, ship to. LIPS delivery item, VGBEL, reference PO number. VGPOS, ref item. VBRK, billing header, FKART, IV, mark material or plant. LADGR, loading group. T001, W plant or branch KUNNR, customer. LIFNR, vendor. 9. Next level configuration. Item categories. Understanding item categories is the secret sauce of SD. NLN, standard item, used in standard deliveries. NLC, intercounty stock transfer, used in intercompany. ULN, stock transfer, used in intracompany. Config path 0184, deliveries item category determination. Usage, V, purchase order. Logic, delivery type, NL, plus item cat group. Norm, plus usage. V, equals, default item cat, ULN. Greater than warning, if your STO delivery is created but the line item is not relevant for picking, check the item category initialization. Go to VOV7, select ULN, and check relevant for picking. 10. Summary checklist for implementation. If you are deployed to set this up tomorrow, follow this checklist. 1. Enterprise structure. Are both plants created? 2. Materials. Extended to both plants. Loading or transport group set. 3. BP, or customer. Created for receiving plant. Extended to supplying sales area. 4. BP, or vendor. Created for supplying plant. Interco only. 5. Plant config, customer number assigned to plant in MM. Sales area, assigned to plant. 6. STO setup, document type UB or NB, assigned to delivery type NL or NLCC. 7. Shipping point, determination rule configured, OVL2. 8. Pricing, calculation schema assigned. By mastering the integration points between the purchase order, MM, and the delivery, SD, you move from being a module-specific consultant to a solution architect. The STO is the perfect example of SAP's integration. If one link, master data, config, logic, is broken, the chain fails.